Welcome everybody to today's webinar. What we're going to be covering today is looking a little bit about the demand side of the battery electric supply chain equation and how that really gets impacted by different technology roadmaps, some of the major changes that we're seeing in the lithium-ion battery supply chain at the moment, and also some of the major sort of issues which are causing that, in particular a bit of a bifurcation we're seeing in the development of the market inside of China and also the market outside of China at the moment. And we'll also talk a little bit about what that means for the individual metals, components, and investment decisions across the supply chain. So I'm joined by my colleague, John Mulcahy. John, do you want to do a quick introduction to yourself?
Yeah, thanks, Andy. I'm John Mulcahy. I've spent around 10 years in the battery raw materials supply chain, working across different functions, procurement and strategy predominantly. And before joining Andy and the team at SC Insights, I headed up Volkswagen Group's procurement function for lithium and manganese.
Perfect. So just as a bit of a recap as to where we are, because it's important to understand that while there's been a bit of a geographic change, the size and the growth rates of the market haven't really changed that much. We're just seeing China being much more of a driver in this sector. We're also seeing a lot more ESS demand, and we'll talk about some of the ESS hype that we're seeing as we go through the presentation, because certainly reviewing what a lot of organizations have put out recently, and what was put out a couple of years ago, you're seeing quite a few forecasters out there 10xing their ESS forecasts, and probably the answer is sort of somewhere in between the two. Certainly a big growth in that market, but yeah, we'll come to that. So looking at the transportation sector, still the biggest sector, will remain the biggest sector in lithium-ion batteries. It seems a long time ago now that you had wait lists for electric vehicles. There was a lot of excitement. People couldn't get them in time. There wasn't really any inventory in the supply chain. We then moved to this sort of second phase, which I think we're still in the vast majority of markets, where there is enough supply of these vehicles, but there isn't enough demand. We're seeing a walk back on a lot of the incentives, and transportation is always going to be a sector that needs to be taxed. So it probably can't have very high subsidy levels for a sustained period of time. And then we start moving to this more exciting phase, which is the yellow phase here, where effectively, if you look at the rate of technological advancement and how quickly these vehicles are coming out and coming to market, as well as increases in charging infrastructure, you start getting to a point where EVs compete or outcompete internal combustion on almost every metric, whether that be the sticker price, the total cost of ownership, the speed, the comfort, you name it. And you could argue actually in many Chinese markets and in some urban markets, we're already there. Now, that's not going to be the case in large parts of the world for a long time. So if you look at more rural areas in places like the USA or even places like Australia, it's going to take a lot longer to get there. And Europe sort of somewhere in between. You then also still have this backstop of political bans or political phasing out of internal combustion. Generally around 2035, that starts to happen in most of the major markets, with some exceptions. Now, what I expect we'll see, and what we are indeed seeing at the moment, is those are being watered down in major markets, because effectively the supply chain is being seen, or the political mandate for the supply chain change to electric vehicles is being seen as favouring China too much versus incumbent producers. And particularly we're seeing that in the US. We're also seeing the European automotive manufacturers have some success at trying to delay this or try and ease the rules on plug-in electric vehicles. So, but all in all, we're still seeing quite a bit of growth. Now, it's not just a case of developing EVs. You need to decide what batteries and what technologies those are going to use. And I think we very much started off on that sort of phase one, where most companies, they had one type of battery that went into one type of EV, and then expanded the number of EVs, but pretty much kept one type of battery, then maybe split between a premium and a non-premium. So Tesla, for example, with the NCA cell, and then we saw the LFP cell come in China. And that sort of, you started to have the segmentation of the market. You're now moving to a stage where you have two or three different chemistries for a number of manufacturers. And again, looking at some of the examples we've seen recently from the likes of GM and Ford, where you've got an LFP, a mid nickel, and then something else. So, for GM, that still be a high nickel cell, for example. We're also seeing a lot more manganese rich coming in that mid tier of the market as well. And I think for us, where we see that trend going is that you'll continue to see more differentiation as product lines grow, as volumes grow, as people trying to segment themselves into more and more niches, which is really reflective of what we see already in internal combustion. You can get sort of 7 different engine configurations for different models of vehicles. You're likely to see that with batteries as well as you start having, premium range, a premium charging speed, that type of thing coming in. And John, I'll pass over to you there for some of your comments on this slide.
Thanks, Andy. Maybe to just build on a few points. So as Andy mentioned, traditionally cathode active materials have been tiered to reflect the EV market. You've seen this change from entry-level vehicles all the way to performance vehicles. But advancements in cathode technologies have been blurring those lines between market segments. Especially when we look at manganese doped LFP, that's obviously breaking into higher performance tiers within the EV segment. And as a result, OEMs are currently re-evaluating their cathode strategies. They're keen to reduce their exposure, obviously, to high risk metals from both an ESG and supply chain perspective, but they also want to optimize cost and performance. And as a result, we're seeing some OEMs exploring new ways to balance that cost and performance. We've seen examples recently of pack blending, for example, where you're combining ternary cells and sodium ion, for example, in the same pack, or hybrid cells where you're looking at an electrode which is double coated, for example, in LFP and NMC. And as a result, you're optimizing your cathode performance as well as your cost. But we'll cover more on this later.
And just going through some of the cathode technologies before we go on to the anode technologies here that we're seeing. And again, you've got this general progression in energy density from pretty much everything across the board. But I think the big issue at the moment is that everybody's been driven by cost. So whereas a few years ago, range was probably seen as the most important factor, with cost as important but sort of secondary. Now it's really a focus on cost, cost, cost. And partly that's because you're competing more and more with cheaper and cheaper vehicles and more mass market vehicles coming into the supply chain. That has seen, I think, every OEM that we talk to change their strategy a little bit and try and focus on reducing costs over the past 2 years. That will change again, almost certainly, because I don't think you can just have a race to the bottom on cost when it comes to the automotive market. You can see that on energy storage systems, but it's just not the way that people purchase private vehicles. You have a whole price range, of vehicles going from 10,000 to $4 million. You're not going to do that with one type of cathode. You're not going to do it with one type of technology. And this is a whole smorgasbord of different vehicles in the interim. Not to mention the difficulties that different tariff structures are bringing into that, and different security of supply, different ESG structures are bringing into that as well. John.
Maybe just to add, obviously, next generation cathodes that are being developed, one of the key components is around energy density. And there are some limiting factors in relation to how cells are combined at the moment, particularly when you look at graphite-based anodes. They form, if you like, a theoretical ceiling for current cathode technologies. And, as a result, next generation anode solutions need to be developed in order to kind of break that ceiling that currently exists in the market today.
Yeah, and moving on to the anode side, obviously this brings us a lot closer to what's happening with solid state, what's happening with semi-solid state, where we're starting to see commercialization of those technologies on a pretty mass scale, again, pretty much in China. We're also seeing quite a few advancements in pure silicon anodes, and obviously, pretty mainstream now for silicon additives in carbon anodes as well. again, I think as we saw with cathode active materials, you're not really looking for one winner. And even if you did have a technology that's significantly better, it's going to take years and years to come into the market. So the rate of commercialization has actually slowed down. Again, it's something that we predicted quite a while ago would happen, and it's just really to do with the sums of money involved. You also obviously have intellectual property barriers. You know, if you invent a new technology, you're not going to give that away to your competitors straight away. And we actually haven't seen a huge amount of licensing, intellectual property licensing agreements happen in this market yet. I think that's been partly, the OEMs haven't necessarily wanted to share where they've invested in a supply chain. You also now are seeing some technology transfer barriers happen as well. You know, we've seen that obviously in China that gets a lot of press, but you also have that in South Korea, and you probably have it in some European and US, the USA as well, where effectively, these new technologies, they don't necessarily want to export them or give licenses for export straight away. John.
Yeah, maybe just to add, I think, the important point here is we're moving beyond graphite-based anodes. So that they're nearing their theoretical performance limit. And as a result, these silicon carbon composites are now emerging as a core technology here to ensure that the cathode technology which is developing can be applied within the cell itself. The issue we're facing within, silicon market at the moment is that obviously excess silicon within the anodes essentially causes swelling and cracking, and that can reduce mechanical integrity and cycle life. So there are challenges with these kind of next generation anode materials at the moment, but they are necessary in order to increase the energy density further.
Yeah, and it's worth mentioning, we're not predicting the end of carbon anodes. You know, the vast majority is still going to continue to be synthetic or natural graphite based. And again, there's more room that can run. It's still likely to remain the cheapest. And the other thing to bear in mind is, if you're bringing in a new technology, the bigger this market gets, the bigger liability risk that you have that it won't work, and that you won't meet the guarantees that you have on cycle life and performance. So it is still quite a conservative industry, particularly when it comes to automotive, where if something goes wrong, you tend to deal with not an individual recall of a vehicle, fixing of a vehicle. You may also have a complete product recall as well. Incredibly expensive to do.
Yeah, so onto this one. Essentially, cell architectures are rapidly evolving. The designs need to be adapted to meet the next generation cathode and anode material that we've just discussed. And as a result, we're increasingly shifting along this curve, if you like, from the liquid electrolyte all the way to solid state. At the moment, there's been obviously prototypes around solid state technologies, but this is yet to be fully commercialized at scale. Semi-solid state is obviously a very promising technology, which is obviously increasingly being rolled out in China at the moment. I think one of the key points to raise here is obviously there's a key differentiation between semi-solid versus fully solid. And the distinction in China at the moment is that semi-solid batteries will now be referred to as solid liquid batteries to obviously differentiate between the two that are increasingly being called together solid state batteries. There is a clear differentiation between the electrolyte structure within each.
Those famous solid liquids. As someone pointed out, in most of the world, we refer to petroleum as gas, which is obviously a liquid as well. So it's not unknown in this sector. But yeah, these are trends that we've been talking about for a very long time. Again, pretty much hit the timelines that have been predicted for the commercialization of those, if anything, a little bit slower. Um, and again, that's partly down to the extreme cost pressures that we're seeing in the market at the moment, with people really just racing to get the cheapest EVs out there, and to increase that sort of mass market side of things and move away from the $50,000 plus only EV product lineups. Just finally on that, you know, again, because it has a huge impact on the lithium loadings. I think typically what you're seeing when we look at some of the cost analysis that we do on the full solid state, with a lithium metal anode. Obviously, that uses much more lithium in the battery, but generally, most of the other technologies don't use a huge amount more. You're looking at 15, 20% more lithium per battery, quite often more in the electrolyte or, used for coating on the anode side on first charge. So it's it is material, but it's not the game changer that many of us thought it would be. And again, this is very much focused on energy density. So, when you're looking at ESS, which is looking to be the big growth market at the moment in terms of percentage growth points and actually potentially in some years in terms of volume growth points, that's still not seeing a huge change in the lithium consumption. And you've still got that threat from sodium ion coming in.
Yeah, so maybe just to build on that as well, in terms of optimizing cost and performance. In China, we're seeing something interesting develop, particularly CATL at the forefront of this, where some tier one battery producers are exploring hybrid battery architectures. So essentially combining sodium ion and lithium cells at pack level in order to leverage their complementary strengths. An early example of this, as I mentioned, is CATL's Freevoy Super Hybrid Pack. And, there are benefits to this, obviously. Sodium ion offers low cost and cold temperature performance, whilst the lithium ion batteries within provide higher energy density. So there are obviously ways in which to optimize the cost and performance at pack level now that are being actively explored in China at this point in time. Some of the challenges associated with this, though, is that you obviously require advanced battery management systems. They have to be highly sophisticated in order to coordinate the differing cell behaviors. One of the key challenges here is around, managing the different voltages, temperature, and degradation profiles across the different cells at pack level. But it is obviously a promising development and something which is increasingly being explored and potentially rolled out in China. Another example of changing strategies, if you like, within China at the moment is around super hybrid cells. So this concept is a bit based on effectively dual layer electrode coating. So some tier ones in China are experimenting with multi-slurry electrode designs, where effectively the example here shows the wet electrode manufacturing process, where NCM is used as a base layer and coated on the electrode, and then a secondary layer of LFP is applied on the same electrode. Similar to what we discussed in pack level, the objective here is to optimize cell performance and cost by combining high energy and high stability chemistries. This will have a significant performance impact as well, balancing out energy density, safety, and longevity within a single cell. But similar, as we've mentioned before, there are significant technical challenges associated with this production method at the moment. But again, this is being actively explored by major battery producers currently in order to balance cost v performance.
A very exciting slide here, just because we finally managed to find a not completely horrendous color scheme for the cathode market share chart. That's taken us age. We actually used artificial intelligence to come up with that color scheme. It's absolutely true. But I mean, what that shows is, our current view, which is not necessarily our current view, is what is announced. So we track all of the cathode producers, all of the cell producers, all the anode producers, etc., and then we aggregate what they're saying they're going to do at the moment, and that's what's shown in this chart. So what will actually happen will be slightly different to that, but not hugely. And you can see, obviously, we've seen that huge growth in LFP market share. Obviously, that's very much driven by China and also increase in ESS. We're seeing LFMP still rolling out. Potentially, some of those expansions will be delayed. A lot of the Chinese producers that we speak to just don't have the available budgets at the moment to implement commercialization of LFMP, even though it is a slightly superior technology for what they're trying to do at the low cost side of things. You've then got this sort of mid tier, which is having a bit of a resurgence, both in sort of single crystal 622 and also the LMR type cells, which we have there under NCM. 370. And I think those that have suffered a little bit recently have been announcements on the 811 and 955, the sort of high cost, high ternary, high cost, high nickel, high performance, particularly on range nickel based batteries. But again, actually they're probably outperforming what people thought they would do on cost because nickel prices and cobalt prices are relatively low at the moment. And both of those markets look to be staying in oversupply for some time. Some supply risk from Indonesia in there, but no, not a huge amount, to be honest. So yeah, I think the general trend, nothing particularly crazy there that you are seeing. Increase in LFP, the rest of the world isn't necessarily going to track exactly what China's done in LFP because charging infrastructure, grid infrastructure is a lot less developed in Europe and North America and South America, etc. You just don't have the amount of investment that's gone in China in recent years on the grid and on the charging infrastructure. So again, it leads you to wanting more range in those vehicles, which more goes to NCM. Also, people typically spend more on vehicles, and the Chinese vehicles that they can import are more likely to have a tariff on them as well, which increases the bottom floor price that people are paying. So again, that's beneficial for ternary cathodes in a lot of markets. How does that impact the different metals? Well, all of them seeing, pretty solid growth from the battery segment. And again, this is just the battery segment that we're looking at. Lithium probably seeing the fastest growth rate there, just because it's used in pretty much everything other than the sodium ion. Nickel slowing down, as I said, just because you're seeing ternary cathode losing market share, and you're also seeing a bit of an end in that thrifting from cobalt and manganese to nickel. And if anything, that thrifting balance is going back towards manganese from nickel now. So you're starting to see a speed up, as you can see there, in the manganese growth rate for batteries. And that's really interesting because, again, it's a market which has very few players outside of China. Cobalt's been a really tricky one. So actually, demand from batteries have been declining recently. We think that growth rate will re-emerge as the market grows, but you're going to see a much slower growth rate in cobalt, and indeed you see some years where it's negative, just because of that. To be honest, with the cobalt market, because inventory stocks are so high, whether that's in China or in the DRC or material coming out of Indonesia, it doesn't look like there'll be any supply shortage. Even with the export restrictions from the DRC, the cobalt market looks very well supplied over the forecast period. And that actually means, it makes it easier to design cobalt back into your battery, if it's beneficial to do that, and particularly if it's beneficial in terms of the safety aspect of the cells as you try and increase the amount of NCM, ternary material, that you can fit into a pack, the way that LFP and cell to pack technology and cell to vehicle technology has been incredibly successful over the past couple of years. John, I think you're doing this one.
Yeah, so maybe just to have a quick dive into the supply chains. This is looking at LFP and LMFP based supply chains. And one of the key points to really flag here is the concentration in China, particularly with kind of the processing and midstream segments of the market. And, as we're all aware, this becomes increasingly challenging for Western operators to develop these supply chains, particularly at the moment, given the low pricing environment we're in. There's a need to obviously bridge the investment gap between incentive pricing and market pricing in order to dislocate that midstream away from China at the moment. And the West at the moment has been quite heavily focused on critical materials, which obviously are hugely important that we develop the mining assets, but the efforts remain quite heavily skewed towards mining and extraction, whereas there's a huge need for capital deployment in processing and midstream, which inevitably will give the localized battery ecosystem that's required for the long term. But as I mentioned, the market prices at the moment are one of the key challenges, and there needs to be increased investment in this part of the supply chain in order to develop outside capacity. And similarly, we're seeing the same kind of pattern again within the sodium ion supply chain. There's clear parallels here between what we've seen on lithium ion, where Chinese companies effectively dominating the processing and midstream elements of the supply chain. The upstream is obviously diversified, and that's something that is not so much of a risk. But when you look at the midstream element of the supply chain, that is a big risk effectively to OEMs as well as the ESS segment for developing this ecosystem outside of China. I think one thing that is really important here is obviously the Western exposure. We're seeing we're seeing tariffs and uncertainty cause somewhat of a lack of a coordinated strategy, leaving the West highly vulnerable to the midstream processing element of both the lithium and sodium ion supply chains. And we've seen similar examples in other markets, such as the semiconductor market, where you have overexposure to a single point of failure. And for the downstream consumers of these batteries, that obviously poses a significant long-term risk.
Yeah, and we keep hearing things, most recently with rare earths, now actually with chips again, of OEMs getting out the COVID era playbooks, and you're like, well, why did you ever put them away? Because you've had years and years to sort of try and overcome challenges like this, and I guess the big issue is, if we look at sodium ion here, the supply chain is led by the demand side of things. I've worked in the financing of 10 or 11 battery plants all outside of China. I think maybe two of them have been cancelled now. But they don't happen without orders. And, we just don't have an industry willing to take the risk, willing to place the orders at the moment. So you're not going to build any sodium ion capacity outside of China or get financing for any sodium ion capacity without a market for them. And you don't get that without the orders, without the contracts. And we're just not seeing that. We haven't been seeing it. And that's why, all of this development is happening in China at the moment on sodium ion. So they're taking, a lead. If anything, it's worse in sodium ion than it was in lithium ion. Um, and it brings us nicely to this, which is quite an interesting one because it looks at, the way that China is developing over the next 5 year period and the way that the rest of the world is developing over the next 5 year period. So the left hand pie charts there, you can see that China's almost 75% LFP now. What you actually see is that LFP market share will decline in China, just because it is so high at the moment. And you're likely to see some of the NCM come a little bit back in the Chinese automotive market. You also see big increase in sodium ion, big increase in other lithium ion, and big changes there. Whereas the rest of the world, much smaller, but much more ternary cathode focused, and a little bit surprising there. But you can see, big differences in the markets. Partly that's because China focuses on supplying three different industries, and the rest of the world focusing on supplying one industry. So China supplies for consumer electronics, it supplies for ESS, it supplies for transportation sectors and many niches in transportation sectors, mining trucks, goods vehicles, etc. Whereas outside of China, the vast majority of cells being produced or planned to be produced are still for the transportation sector. And that creates many challenges. So, it would be great to see some more ESS plants being put up out there. We'll talk a little bit about why that isn't happening at the moment in a couple of slides' time. John, over to you this one, just in light of obviously the year-long suspension announced today in Chinese rare earths. licenses, which I guess might have a knock-on impact on the graphite export license regime as well.
Yeah, slightly less relevant today than it was yesterday, but I think, what's really key to flag here is that, China is moving to protect strategic battery technologies. And even though, these export controls have been delayed by a year, they're obviously very keen to safeguard domestic innovation and capabilities. There's a clear objective from the areas they did target, although as I mentioned, this has been delayed by a year, that they want to incubate next generation cell as well as key areas within the supply chain, whether that's precursor, cathode, and anode technologies. So, going back to kind of the previous slides where we were looking at that midstream segment that really needs to be developed outside of China, some of these core technologies that they potentially may limit in the future directly impact the West's ability to develop that further in some cases. So I think it's very telling that this probably isn't anywhere near the final chapter in terms of the China-US relationship and how that will evolve. But I think it's important to understand kind of the importance of these elements of the supply chain and also, the dominance at the moment that China has on them. Although, as I say, there is opportunity still to invest and diversify that outside of China.
Yeah, and finally on that, I just think if you look recently at the latest sort of manufacturing 5-year plan for China, it's very much business as usual, and why would they change it? It's been incredibly successful. So what that does do is it leaves us, or many of the industry parts of the supply chain, whether that's in raw materials or in midstream, sitting in a position not dissimilar to this. And we've sort of highlighted this on lithium. They're not exact numbers, but effectively where you are is it's very difficult to get financing in the current price environment because the asset won't make money at the current spot price or the China export price. Because most stages of the Chinese supply chain are in oversupply, or global supply chains in total are in oversupply. And what that means is what we're doing with a lot of our clients is trying to sort of square this circle. They still want non-Chinese material, but they can't go to their managers and say, I'm going to lock in a price which is higher than the current spot price, which is interesting because, the majority of OEMs and also folks deploying ESS, they will have long-term models for what they expect target prices to be. That's what they're comfortable paying over the course of a production cycle. They also tend to have a view that they don't like volatility because you like volatility when you're selling one product. You've got a fixed price for your vehicle or your product, and then your raw materials are changing. And certainly in markets like lithium and many of the critical minerals, they're not really liquid enough to have a proper hedging program to manage your price risk either. So ultimately, what you end up seeing is just sticking to that spot price and not allowing investment to happen will mean that ultimately, over the course of the cycle, the total dollar value that you pay for your raw materials or components will be higher than if you actually locked in a longer term price, which you viewed as fairer or more likely to be there. So as I say, if that's something you're interested in, do reach out because we're working with quite a few clients at the moment on these target prices and having a slightly fairer way of getting your supply chains built that actually reduces risk and should reduce the amount that you pay over the course of a production run as well. So before we move on to the questions, and I see we've got plenty of them there already. So sort of key takeaways from this, obviously the market's still growing very healthily, 15% plus a year. Some markets growing more than 20% a year. And we're still seeing a lot of technological change coming through the pipeline, both in ESS and in transportation. ESS, certainly the energy density of the average sort of packs that we're seeing, or the average container size installations, really increasing at the moment. You're seeing a lot more optimization of that technology. A bit of a divergence happening at the moment with most Chinese OEMs continuing to invest while those in Europe and the US take a bit of a pause, or the so-called legacy ones. And I think what you'll see there is that and it probably already has opened up. There's this technological advantage in battery tech, also in software, where the Chinese sector has, a 2 to 3 year advantage over what's happening elsewhere, mainly because of speed and continued investment. And that's similar to sort of where Tesla were 5 or 6 years ago. So it's something that can change, and it's we're not saying that the European and US OEMs can't catch back up. But what you are likely to have from the current delays is a skip in a generation. And what that will do is allow the Chinese to have a couple of years of having an advantage, which again will have a huge impact on the branding of vehicles and the branding in the Chinese industry. So again, it looks like that's going to be very positive for a lot of the Chinese OEMs as they expand outside of China. And again, you can see in many markets in Latin America and Southeast Asia, Australasia, where the Chinese OEMs are really starting to win in those markets. And again, that's partly because outside of China, we're basically seeing zero final investment decisions recently. Most weeks you read about a delay or a cancellation. We've seen that with some announcements from GM and POSCO over the past week. And that doesn't seem to be changing anytime soon. So really, it's been a year of decline and uncertainty. Typically, we do a huge amount of financial modeling here for our clients on individual asset types, whether that be PCAM, CAM, cell production, or mines and refineries. In many parts of the supply chain, particularly manufacturing heavy, China has a 15 to 25% advantage in production cost. We discussed in previous webinars that it's not really about labor and energy costs. It's about financing costs. It's about byproducts. It's about cheaper raw materials, cheaper shipping for raw materials, and generally operating in a much larger ecosystem to other parts of the supply chain. Now, those types of comparisons mean that, okay, well, 15 to 25% is typically a profit margin for a lot of cost plus industries. That's what you want your return on capital to be, to make it worthwhile, to actually make your investments. And you're very much reliant upon trade barriers, tariffs, subsidies from your own local governments. And that's kind of okay, but it's only okay if there's any stability in that. And the problem that we've seen with all of the tariff uncertainty isn't necessarily that tariff levels are there or that you're going to have tariffs that will, settle around 10, 25%, as we're seeing, 9 months after being announced, whatever, that's basically where you get to. And this is, both US tariffs and then the reciprocal tariffs which come on from them. So it's not just the US doing this. And it just leads to uncertainty with the margin, and you just can't make an investment decision with that level of uncertainty. So we've had this sort of almost sort of economic sabotage in the West, which has really impacted the transportation sector, the automotive sector in particular. Looking again at the technologies, cost has been the winning metric for the past couple of years. Really, that's just part of the evolution of moving to mass market and the sort of mass commercialization of these technologies, both in ESS and transportation. We think that will change going forward. Yes, cost will remain important, but there will be more and more metrics that you need to focus on and optimize for. And that's really important for companies to understand what their options are in terms of technology. Very few companies can afford to, in fact, probably no company other than CATL can afford to take every technology to the nth degree. So you need to make decisions on what is optimal for you and your portfolio. And then finally, I think on the, what you're choosing then on your electrode mix, both anode and cathode, it's going from that, just having one to having two to having three to having more. And again, to do that, you need an optimized supply chain. So anything you'd like to hear about there, feel free to reach out to us after the webinar. I'll leave this slide up, which just talks about some of the product offering that we have. I think here we are highlighting our lithium product service, which is not just lithium, but also looks at the cathode and cell side of the supply chain as well. And we will move on to some of the questions. We have about 20 minutes left, so we'll try and get through as many of these as possible. Um, so let's start with there is a huge risk here for the long-term planning within OEMs, multiple options for cathode, multiple options for anode and cell format. How does one plan for what seems an ever-changing market? China seems to have gone down the LFP route with some variation on cell formats, with the only choice being on the vehicle brand or model. Or indeed, yeah, there's not much difference between the vehicle brands and models with many of the new Chinese formats as well. And John, I'll pass this one to you. And in particular, I think your comments we were discussing earlier on, what can the OEMs do? What decisions do they have to make? And how much differentiation actually is there?
Yeah, for sure. I mean, I think that, obviously the OEMs tend to plan on 5 to 7 year product life cycles. And I think that there are huge challenges for them at the moment. They've obviously, initially there was huge potential for ternary cathode chemistries, and I think a lot of the OEMs were quite heavily focused on that. We then went through a period of extreme raw material price volatility, which I think led to, increasing consideration around cathode chemistries and how to optimize them. And I think we're in a period now where obviously the performance of a cell is fairly optimized, right? Your incremental gains from, a charge rate of 15 minutes to 10 minutes, for example, or 0 to 60 from 3 seconds to 2.5 seconds. Obviously, this all comes at a significant cost in terms of your next generation cathode technology. So I think we'll see, a more sustained period where they're looking to optimize costs, whether that's, utilizing new technologies that reduce exposure to highly volatile metals, as well as looking at, potential hybrid options that
Gen and even the one after that. Why not commercialize what works? And yeah, I think you're absolutely right with the question. And again, it leads into what John just said. You know, do we just then get to what's good enough? And if we look at things like acceleration, yeah, I think we're probably already there in terms of charging times. That's really down to the infrastructure more than anything else now. Certainly in the next generation of cells that we'll see. Um, you know, where you drive and how you drive depends on your situation. So, again, discussing with John earlier when we went through the slides, I would much rather my vehicle. I don't care how fast it can charge. I've never gone within 100 um, kilowatt hours of speed to what its theoretical fastest charging is driving around the UK. I'd much rather it could drive another 100 kilometers so that I never had to use a fast charger and I could always charge at home and it would always be cheaper. So, there are many things like that which will, have an impact here in the UK where it's impossible to drive for more than 6 hours because you hit the sea. Um, Very different to if you're driving in Turkey or if you're driving in the US. Um, then here I've learned that semi-solid and solid-state batteries can charge less than 100 times in total versus 3 to 5,000 for regular EV batteries. So yeah, I mean the 3 to 5,000. I mean some of them are even 7 or 10,000 plus cycles going down to a 80 or 70% total capacity. When you're looking at the solid state side with any new technology, I think it tends to be that the life cycle of the cell is much lower as you go to development. Obviously, you're not going to put a battery that can only do 100 cycles before hitting 80% into a vehicle. You might put it into a specialist application, some type of drone or something like that, but it's very unlikely to do that and it's just again something that people work on in part of the development of these cells. So, and there's certainly some semi-solid state batteries do much more charging cycles than that. John, anything to add there? No. Um, is the single crystalline mid nickel high voltage NCM 622 really a 622, or in fact a 63613? Simple answer to that is it's neither. So the whole sort of way of calling these ternary cathode cells 811, 622, etc. It's kind of just sort of catch-alls. They're not actually 80% this, 10% that, 10% that. Most 811 cells are probably 84, 85% nickel. So it's just important there not to get stuck on the numbers, as they're just sort of broad characterizations. And indeed, in the models that we have, we use the actual averages that we work out rather than just sort of taking the random numbers there. And indeed, we change the numbers that we use quite a bit. For NCM LFP dual layering, is one cathode layered directly on the other? If so, how does it interface? How does the interface between them affect the performance? Um, from what I've read, yes, it is one layered on top of the other, and there is some kind of barrier between them. But you're probably better off Googling that one, because there's been a lot released from CATL over the past week on that one. John, unless you wanted to add anything on the layering.
On they are layered on top of each other, and I think that this is still very early in terms of how it's developing. There are challenges associated with degradation and capacity loss of the interface. So I think that it's a real challenge, but we can find out more details for that and follow up after the call.
Yeah, I mean, my question on that when I was reading about it was, why do we need it? Is it actually going to make that much difference? And the interesting thing was, CATL have obviously developed this while also developing the hybrid packs. So, does it make more sense then to have these layered cathodes, where you're, you know, trying to sort of optimize the capacities of the cell, the performance of the cell, in different scenarios? Is it easier to do that with layered cathode than it is to do with a pack with two different cathode types in? And I guess the answer is yes, but interested to see if anybody knows the answer to that one. It's also worth noting that on the anode side, we've seen this type of layering as well, where people have effectively not necessarily been using different components, but have been trying to sort of phase the crystalline structure of the anode, to make it more efficient. So you've got sort of, different sizes and different structures that are being used. We're very bullish on LFMP and LFP. Won't next gen LFP be able to keep the pace of energy density increase in the future? So, our previous webinar focused very much on Gen 4 LFP. So I will refer you to that. Yes, we are still bullish on LFP development, but you do start reaching, how far it can go, and the improvements that we're starting to see now are pretty incremental without moving to LFMP. I think for us that makes more sense. And then after that, I say it's really the anode, which is the equation between the cathode and the anode that becomes the most important thing. Is LFMP based on carbonate or hydroxide? Typically carbonate, from what we're seeing at the moment. You are also seeing, and again referring to the last webinar that we did, a change in the lithium supply chain at the moment, with more folks looking to not necessarily produce a battery grade carbonate, but optimize on just producing a chloride or a technical grade carbonate. Some sulfates coming in, particularly lithium sulfate coming in, particularly from Zimbabwe, over the next few months, and that's more likely to start going into LFP, LFMP supply chains as the lithium dihydrogen phosphate. So quite a few changes there happening in lithium process flow sheets as well. Any views on LMR manganese rich batteries going forward? Yeah, I think they've had a good year basically, and it's where they fit is in part of this optimization of what the mid tier will be. This mid tier performance where you're trying to reduce the cost but keep some of the energy density of the ternary cathode cells by increasing the manganese side, and you know that works pretty well. Again, it sort of fits with this view, and we could probably have done a slide on LMR alongside the slides on packs with different cathode types and onside the layering as well. It's about trying to find this sweet spot in the mid tier where you're saying to everybody, we'll tick as many boxes as you can on cost, on performance of the cell. Um, how much lower is the lithium content in hybrid battery packs? I'm not aware that it is lower in a hybrid battery pack unless you're referring to a plug-in hybrid, in which case, you're quite often dealing with a 15 versus an 85 kilowatt hour pack. It's a very big difference. But again, differences with range extended vehicles. Did China's revised export restrictions announced on October the 30th impact PCAM exports from China, scheduled to begin on November the 8th? John, do you know that one?
No, not familiar with whether it directly impacts PCAM exports on November the 8th. I mean, all we know is that the proposed export controls effectively have been deferred by a year. So it gives a bit more breathing space, obviously, to that supply chain and is good news. But this can rapidly change, given the relationship between China and the US. So it's one we're monitoring closely.
Yeah, I think from my point of view, what we haven't seen announced or any language on, which we quite often see with political announcements, is very little detail in there, and effectively the technology control that China wants to keep is still likely to be there, even if they're allowing the materials to be exported. And again, it was never really a ban. These are just licensing regimes that are being brought in, which allow more control. So yeah, worth focusing on the language there. And another note on language, we saw the US and Japan announce yesterday, a bunch of Japanese investments in US, including the battery supply chain. But again, the language just considering being involved. So it's just a flowery way of saying we'll look at it, rather than some folks reporting that as an actual signed off on investment. So really important to look at the language around these. As I say, with the Chinese, what they're generally trying to do is just give themselves more options, and also be able to protect their intellectual property in a way that they haven't had to try to before. And as I say, many countries do that, as I mentioned previously. Um, the $20 per kilogram as a target incentive price for OEMs. What was that for an Asian OEM or a Western one? So I think we're familiar with a couple of OEMs who model long-term lithium prices at one at 16, one at 19, around that level, certainly a lot higher than the current price today. John, I don't know if you want to add anything on that.
Well, I think the key here is that obviously current market prices are significantly below the planned target prices of OEMs. And, that's one of the key bottlenecks in the industry at the moment, that the OEMs obviously are not willing necessarily to pay above market price, but in order to kind of incentivize localized production, there needs to be a pricing mechanism that moves closer towards the incentive pricing and their target pricing, which is often built into their planning rounds.
Yeah. A couple of questions on super hybrid cells. Is it a commercial level or only R&D? Very much R&D at the this time talking about layering, and again agree with your comment that you would assume that this would increase production costs. We've seen the challenges that people have with coating on cells, particularly when it comes to dry coating. And mixing slurries as well doesn't seem particularly easy. What I would say is, these things, how to make things smaller and coat them on smaller and smaller foils, whether that be in solar technology, whether that be in battery technology. It's an industry that's made huge leaps over the past decade, with a lot of those advances coming in China. So I think it's very much in R&D at the moment. We'll see whether it actually needs commercialization in the future.
Maybe just to add as well, the kind of pack level super hybrid battery, if you like, it is being rolled out next year in Leap Motors D19 model. So fairly close to commercialization on that one, but agree with Andy on the double coating, if you like.
Yeah. Then, what role can recycling play in the trajectory of technology roadmaps discussed in terms of chemistry selection and battery design? So, at current price levels, there's actually a trade-off when you're producing LFP cells, assuming they're coming back into your supply chain. And if you look at Europe in particular, where there are a lot of targets for recycled content, it actually means it actually can make more sense, or it doesn't mean it necessarily makes more sense, but it helps on the commercial decision in favor of ternary cathode because you've got more value of the material that you have to recycle anyway. And what you want to do is keep recycling not being a high cost for you. So where you have legislation to force recycling, it's actually slightly beneficial for higher cost, higher performance, um, lower volume, therefore cathode active material. So again, it, I'm not going to say it's hugely material from when we've modelled it, but if you look at recycling of LFP at the moment, you're not making a huge amount of money out of that, if anything at all. Whereas with NCM cells, at least you've got some more value in there. So yeah, that is quite an important thing for them. Given that ESS is more cost driven, do you see sodium ion winning there in the long term? Yeah, potentially. The problem with sodium ion at the moment is that it's not really produced at the scale of these cheaper lithium ion cells to compete on price. When you see lithium prices increase in the longer term, we would expect to see sodium ion have a resurgence there. And again, focused on the ESS sector. The ESS sector, though, itself is not just one sector or one homogenous sector. You've got your home charging, you've got your frequency auctions, you've got combined with solar plants, you've got connected to a grid, not connected to a grid. You've got things where you need to discharge very rapidly, things where it takes a long time to discharge, changes in the power markets, changes in the peaks and troughs on pricing, changes in the way pricing works. So, again, the point I'm trying to make there is that there is no one ESS market that will have one winner. So you can't say that sodium ion will take all of the market share from lithium ion. It will take incremental parts of that market share. What's your rationale between China seeing greater ternary demand growth to 2035 when ESS outpaces? And yes, so again, a lot of it's from what clients have announced that were reflected in those numbers. It's a little bit surprising to us. It's possible it will change. But as I say, I think in the future you will see a little bit of a resurgence in China of ternary cathode over LFP and LFMP, although those two will continue to be the dominant technology. I think we are out of time now. There are a couple more questions there, John. I don't know if there's anything in particular that you wanted to go through here. If not, we can get back to some of these questions offline. I see we've got a few there on some more on LMFP and manganese rich. So perhaps our next webinar should focus on manganese's role in the supply chain, and then before the end of the year, we'll also try and do one looking at the raw material markets and what that's likely to hold, what 2026 is likely to hold in store for us. John, anything else you wanted to answer there? I see it's about another
No,
12 questions, so we're not going to get through all of them.
sounds good. I think a manganese webinar will be good next.
Cool. Sounds good. All right, finally then, just 'cause it's the last one there, when do you see the tide turning for lithium? Did you see JP Morgan put out today 2026? I'm going to go that. I'm going to go 2026 and leave you all in suspense for us putting out our latest figures. All right. Thank you all. Been a pleasure as always. Thanks so much for the questions. And these slides should be shared with you relatively soon. Thank you.